Coming up on Business Incorporated. Common market for Eastern and Southern Africa signs AU protocol to consolidate relations. And Zimbabwe's Apex Bank says it's exploring central bank digital currencies but reiterates opposition to cryptocurrencies. And Botswana aims to build its biggest renewable power plant to boost cleaner energy use. Good morning, good afternoon, wherever in the world you're watching from. It's Business Incorporated, live on Channels Television. Let's take a look at the markets now. Trading on the African continent is positive at intraday. Nigeria's main index rose slightly by about 0.09%, while South Africa's benchmark index rose 0.46% at intraday. Elsewhere, Egypt's index also traded higher by 0.85%, while the Nairobi Stock Exchange closed Friday with a strong performance, up over 1%. And over to the Middle East, where sentiment was mostly in the green at intraday. However, people at the Abu Dhabi market saw both indexes trading in positive territory. We see the Abu Dhabi index there up 0.74%, while Dubai jumped 1.04%. Still within the region, Saudi Arabia's index fell 0.24%. Was higher than while the Qatari index rose strongly by 1.14%. All right, now let's talk about Germany's best-known financial institution. That's Deutsche Bank. Its head is calling for an end of loose monetary policy, and the U.S. hedge fund Cerberus is selling another large Deutsche Bank share package. Let's talk to Chris Kobe now, right there in Berlin. Great to have you, Chris. Well, the head of Germany's biggest lender, Deutsche Bank, is calling for an end of loose monetary policy. Why is this?
It is the concern of persistently rising prices that is on Christian Sewing's mind. It is becoming increasingly clear that the world economy is dealing with structural inflation, the Deutsche Bank CEO said at the firm's digital New Year's reception. Governments around the world had done a good job in quickly and pragmatically protecting the economy from a coronavirus depression, Mr. Sewing said. But now we have to think about how to get out of the dependence on gigantic fiscal programs and loose monetary policy. Many of the foreseeable risks have one thing in common: they increase the pressure on prices. Now, if that was the case, we will soon have to have higher interest rates if inflation expectations are not to skyrocket. Central banks worldwide will have to take countermeasures, Mr. Sewing stressed. The European Central Bank has so far stuck to its course with interest rates at record lows and bond purchases. After the last monetary policy meeting last week, however, ECB President Christine Lagarde admitted that Europe's monetary watchdogs are also becoming increasingly concerned about the unexpectedly high inflation rates. Now, the central bank will reassess the situation in March on the basis of fresh data. Inflation in the Eurozone continued to rise last month to 5.1%. In Germany, it remained at a high level of 4.9%. Rising energy prices are, in particular, fueling inflation. But there's another layer to the problem, because according to the Deutsche Bank CEO, rising prices are also a result of changes and disruptions in global supply chains. The situation is reminiscent of the oil price shock, with one difference, Christian Sewing said. While in the 1970s they were characterized by a supply shock, distortions on the demand side now also play a key role. Fueled by trillions in government spending, global consumer demand has reached unprecedented dimensions, he says.
Right, and just as interest rates could be rising again, making the banking business potentially more profitable, one of Deutsche Bank's most important shareholders further limiting its share stake in the lender. What's behind that?
It is certainly an interesting move. One could anticipate better times ahead for the European banking sector. However, U.S. hedge fund Cerberus is reducing its stock in Deutsche Bank. Now, the reason behind it most likely that structural changes at Deutsche Bank, as well as its domestic rival Commerzbank, of which Cerberus is also a shareholder, simply didn't happen rapidly enough. Deutsche Bank in particular had for years been mired in controversy over questionable deals in the past. A new leadership announced the bank's withdrawal then from several international markets. Also, for quite some time, there was talk about the two lenders merging. Specific plans had already been drafted. That was something that also Cerberus had been betting on, as a combination of Germany's two best-known banks would have created a real giant with a strong domestic and international profile. That at least was the wording among investors. But in the end, the deal did not happen. Neither did a tie-up between one of the two banks and a foreign lender, which had also been viewed as a potentially fruit-bearing option. Now, Cerberus has been holding stock of the two lenders since 2017, when it bought 62 million shares of each of the firm. And that was quite a thing back then, because at least for Deutsche Bank, it was the first time that a private equity company owned a big stake in Germany's biggest lender. Now, Cerberus has used a rise in Deutsche Bank's stock price to put a package of 15 million shares up for sale, the total value around $246 million. It is the second time within 4 weeks that the firm is divesting from Deutsche Bank. In January, it had reduced its holdings from 3 to 2% of Deutsche's total number of shares. At the same time, Cerberus had sold a portion of its Commerzbank stock. So far, it hasn't been a particularly good deal for Cerberus. Both share price of Deutsche and Commerzbank traded higher at the time of the investment than they are now, although things could have been worse, as Deutsche Bank shares have been rising steadily since March 2020.
All right, Chris, let's look at the markets now. Investors were mostly cautious yesterday. German stocks, ended the day only slightly up. What does today's trading session look like?
We're taking further steps into positive territory. The DAX gaining around 0.8% in the early parts of Wednesday's trading session, after advancing 0.2% on Tuesday. Investors eyeing a swath of earnings reports today. Among the companies presenting their latest figures are U.S. entertainment giant Disney or French cosmetics company L'Oréal.
All right, that's Chris Kobe right there in Berlin. Thank you so much, Chris. Moving on now, we see today we have trade data from the UK and Germany showing a slowdown. Let's get more now. This data from Juliana. Great to have you, Juliana. Well, the data from Federal Statistical Office shows that imports from the UK into Germany tumbled by 8.5% during 2021. I'm guessing it's Brexit issues.
It's got to be, Laddie. Good afternoon. And it's a shame for British businesses, really, because last year, Germany's importing rebounded. It rebounded by 17.1%. There was a growth of over €1 trillion, not just within the EU. I believe amongst the EU counterparts, imports into Germany rose by about 20%, but also China, which, isn't affected by the EU. Imports into Germany rose 16%. So I think this 8.5% loss of imports for the entire year of last year is not great. In December alone, year on year, trade dropped 17.1%. And yes, this has got to be down to Brexit and trying to charter new relations between Boris Johnson and the new German Chancellor Olaf Scholz. I think lots of work certainly needs to be done. And it's because of the bureaucracy. I think bureaucracy, red tape, border controls, there is, amongst all of the other headlines that are engulfing Downing Street at the moment, huge queues at Dover. When the withdrawal agreement was ratified, Germany instantly put checks on goods coming into their country from Britain. However, Britain has delayed the checks for goods coming into the UK from Germany. I believe that will be taking place sometime this year. So some businesses will also say that it's not fair, but Anglo-German trade has always been very, very strong. I think the Chancellor will do do his best to try and make it right again. There was a reshuffle in the cabinet yesterday. Jacob Rees-Mogg, a pretty controversial Conservative MP here, has been made a Brexit minister in charge of looking after businesses in the light of Brexit. And I'm sure sorting out this trade relationship with Germany will be at the top of his list.
Right, let's see how the minister performs there. But let's look at some M&A news now. Airport Services Group, John Menzies, have rebuffed a takeover approach from a Kuwait firm. Tell us about this deal.
Yeah, this interesting story, actually. So Agility Public Warehousing is a Kuwait-based corporation. They've got revenues of over $5.4 billion. This is the second approach that they've made to John Menzies, which is a Scottish-based airport logistics company, one of the biggest airport logistics companies in the world. So they handle bagging and departure services and other operational services within airport lounges. They operate out of about 200 airport lounges. They've got about 25,000 staff. Now, Agility Public Warehouses tried to up the offer that they had provided earlier in the year to Menzies, who have said that they sought counsel from Goldman Sachs that asked them not to agree to this bid, which was unsolicited, £469 million. Some would say John Menzies definitely should have taken that, but they said that the deal, and I quote, doesn't reflect Menzies' true intrinsic business worth or its prospects. And it does appear as if shareholders agreed with that, because their share price shot up about 4% after they rebuffed this M&A approach. So pretty interesting. But Agility are a small company on their own, and clearly as the world is starting to open, we've seen that summer bookings are back up and running again to pre-pandemic levels. They want their hand on this firm that seemed to have a total control over airport logistics.
Yeah, investors were quite impressed by that, just looking at the share price. But how are the markets looking generally?
Yeah, the markets are doing pretty well at intraday. The FTSE All-Share is up. The FTSE All-Share is up by more than 0.5%. The FTSE 250 is also doing particularly well. I believe that was up by over 1%. And then in the currencies market, the British pound is flying high. There are two stories really on the markets today. GSK GlaxoSmithKline, which is a huge pharmaceutical drug maker, their share price dropped slightly at intraday, although it was higher earlier today because they announced bumper profits for 2021. Of course, they've been helped by providing some sort of a drug alternative to the COVID-19 vaccine, but profits are falling, and they are under increasing attack by activist investors who want them to get rid of their healthcare arm, which Unilever tried to buy earlier in the year, but they rebuffed that. And then house builder Barratt Developments, they are trading up higher because they have said that they are going to up the amount of houses that they're building this year. I've been discussing extensively with you, Laddie and Inni, about the price of houses, and that's because the demand is there, because there aren't many houses. So they said they're going to fill that demand, which cheered investors.
Right, very interesting. All right, Juliana, thank you so much. Enjoy the rest of your day.
Thank you. Thank you.
All right, let's take a look at what's happening in the U.S. Here, stock futures rose in early morning trade as investors prepared for another round of corporate earnings. Dow Jones futures rose 2,021 points, or 0.5%. S&P 500 futures gained 0.7%, and the Nasdaq 100 futures rose 0.9%. Let's get a review of trading yesterday. Our correspondent Maria Bird. Take a listen.
The stock market rose on Tuesday as the S&P 500 was up by 0.8%, the Dow Jones increased by 1.1%, and the Nasdaq increased by 1.3%. Even though investors were a bit cautious as to what happened last week with the decline in many tech stocks like Meta shares, they were very cautious but yet hopeful for the tech industry, buying up much of it on Tuesday.
All right, after the break, I will look at trade relations between the United States and the East Africa community. That's in a moment. Just stay with us. Welcome back. Now to our next conversation. We see the Biden administration in July had unveiled a new push to expand business ties between U.S. companies and Africa. The U.S. government is engaging in robust talks with Kenya as part of its drive to expand equitable and inclusive U.S. trade investment on the African continent. Let's discuss expectations for trade relations between the U.S. and East Africa community with Rose Rono, international trade consultant at TradeSmart Consult Limited, right there in Nairobi. Great to have you on the program.
Thank you very much. I'm happy to be here.
Great. So how would you describe trade relations between the U.S. and the East Africa community in 2021?
Well, I think the trade relations have been relatively good. And I think for Kenya, speaking for Kenya, Kenya has been, the U.S. has been one of the biggest trading partners for Kenya. So deepening the relations between Kenya and the U.S. is definitely on the agenda of both countries. And the countries have been working on negotiating a free trade agreement that will secure trade relations even beyond the AGOA, which is coming in 2025.
Right, and the Biden administration is talking about a new push to expand, business ties between the U.S. companies and Africa. What are the expectations with these plans?
Well, definitely, as Kenya, we're expecting investment. We're expecting U.S. companies to be able to invest in Africa. We're also expecting to continue as Kenya having duty-free access to the U.S. market across several products that we supply. So basically, we're looking at the assured access to the EU market, the US market. And in addition to that, we're looking at the American market investing more in the African continent. And specifically, we're looking at investment in different sectors in Kenya, including financial services, including communications, including agriculture, technology. So I believe we have quite a bit to be able to work together with the US government.
Right, and the previous administration before Biden had launched talks with Nairobi on a bilateral free trade agreement. How did those plans play out?
The plans are still going on. Negotiations are still at very advanced levels, and we are hoping that in the next few months should be concluded, and the free trade agreement should be announced. So that is still in progress, but we are hoping that it will be concluded in the next few months.
All right. So it's 2022. What are your expectations for trade relations between the U.S. and the EAC?
The U.S. is one of the biggest trading partners, as I've mentioned, to some of the EAC countries, including Kenya. So we're expecting to deepen our relations. We're expecting to increase trade amongst the two countries. We're also expecting the U.S. government is going to invest a lot in areas of trade facilitation, in areas of easing movement of goods. In the region. So not only are we looking at trade, but also we are looking at technical assistance in terms of ensuring there's seamless trade between East Africa and the US.
All right, and what commodities do you think are on the radar regarding trade between both blocs?
We're looking at agricultural commodities, also looking at textile, horticulture. There are quite a number of commodities that are there that have a potential of accessing the U.S. market. And with the AGOA that we had and still have, there are quite a number of lines or commodities that have not yet been exhausted in terms of accessing the U.S. market. With the duty-free agreement that we have. So we're looking at growing even past the commodities that we are currently exporting to the US in terms of textile. We're looking at growing more product lines and accessing the US market.
All right, that's Rose Rono, consultant, TradeSmart Consult Limited. Thank you so much for coming on the program.
Thank you.
All right, now, so a common market for Eastern and Southern Africa has signed the protocol on relations between the African Union and the regional economic communities meant to consolidate relations. The signing ceremony which took place the AU headquarters in Addis Ababa, was witnessed by all parties. The protocol aims to, among other things, formalize, consolidate, and promote closer cooperation among the regional economic communities and between them and the AU through coordination and harmonization of their policies, measures, programs, and activities in all fields and sectors in line with the principle of subsidiarity and complementarity. Other regional economic communities that have already signed the protocol include the Economic Community of Central African States, the Community of Saharan States, and the Southern Africa Development Community. This protocol entered into force on 10th of November 2021 after being signed by the Chairperson and Commission and the 3 chief executives of 3 regional economic communities. And the Zimbabwean Central Bank has reiterated that it prefers the central bank digital currency to cryptocurrencies. In its latest monetary policy statement, it adds it is now actively exploring the feasibility of adopting a Zimbabwean CBDC, including specific design and considerations. Meanwhile, in the monetary policy statement, the RBZ also revealed that its fintech regulatory sandbox, which was launched in March 2021, has received 112 registrations on the online portal and a further 31 applications at various stages. According to the central bank, the software and systems development category alone accounts for 48% of what the bank refers to as registered users. The RBZ, in the meantime, says the sandbox remains open for innovations, while guidelines that prospective applicants can use are found on the institution's website. And Botswana seeking companies to build and operate a 200-megawatt concentrated solar power plant, its biggest clean energy project to date. In an announcement, the Energy Ministry issued an invitation for companies to pre-qualify for the program, which would involve financing its construction and completing the project by 2027. The state-owned Botswana Power Corporation will buy the electricity produced. The plant is part of the country's integrated resource plan, under which 795 megawatts of new generation capacity will be procured or built by the government. In the years to 2040, at least 61% of the new projects will be renewable, including solar and wind plants. Concentrated solar power projects use lenses or mirrors to focus a large area of sunlight onto a receiver. It's a more expensive technology than photovoltaic solar power. And after announcing the final investment decision, the shareholders of the East African crude oil pipeline now turn to looking for money to conclude a deal for financing of the project, which is expected mid this year. The EACOP is a key infrastructure project that will transport Uganda's oil to export markets. It's a major component in the commercialization of the Lake Albert oil resources. 1,443-kilometer pipeline from Hoima in Uganda to the Indian Ocean port of Tanga in Tanzania will cost $5 billion, a jump from the original cost of $3.5 billion due to increase in prices of key inputs such as steel, cost of shipping, as well as the cost of loans. EACOP is to be financed 60-40, split between debt and equity. This means that shareholders will raise $2 billion between them, while the remainder is raised through loans from banks and other international lenders. All right, let's take a look at what's happening in the global oil market. We see oil prices nudged up following 2 sessions of losses after industry data showed an unexpected drop in U.S. crude and fuel stocks, offsetting concerns of a possible rise in supplies from Iran. Brent crude futures rose 23 cents to $91.01 a barrel, while U.S. West Texas Intermediate crude was at $89.47 a barrel, up about 11 cents. U.S. crude, gasoline, and distillate stocks fell last week, according to market sources citing American Petroleum Institute figures Tuesday. Crude inventories fell 2 million barrels, according to API, versus analyst expectations of a 400,000 barrel increase. And that's it on Business Incorporated. Thank you so much for watching. I'm Ladi Williams. Bye for now.